We could start with Bitcoin because some of the other cryptos kind of are derivatives of it and share some of the characteristics and not all of them. And so, basically crypto is a way for it's like an alternative currency. And so, a lot of the pushback about governments is that they spend too much. And so, they'll print money and run government deficits, and you'll see inflation because of that. And so crypto is seen as a benefit, particularly Bitcoin, because you can't print it. It has a fixed supply, which is decreasing as time goes on, and it's going to max out soon. And so governments won't be able to spend because of it. Another big feature of crypto is the blockchain part of it, where everybody can be anonymous and there is a ledger, there's a record of every transaction. And so, it has this decentralized nature, and the anonymity behind it makes it very attractive. So maybe you can speak on the blockchain part from your perspective and kind of fill in whatever gaps I missed there.
Sure. So keep in mind, this is coming from somebody that, like Andrew was saying, is not a big crypto person. But as somebody who has worked in the finance industry, loves to talk about finance, banks, insurance companies, all the boring stuff, the blockchain technology offers some advantages in that the ability to conduct transactions over the technology is, from what I understand, far quicker, far easier, cheaper, and is a lot more efficient than the current systems that we have. And in particular, with the protocols that are used by companies like Visa, MasterCard, American Express, and some of the other big fintech players that are coming onto the stage, like PayPal and Square, for example, they have all acknowledged that not Bitcoin, but the blockchain technology might offer some advantages to them and allow them to conduct payments over that system in a much more efficient way. It also has the ability to, at least at this point, is proven to be unhackable. So that offers some security to the payment system. And I think that is, very encouraging and also attractive to people that want to make payments. There are people out there that are afraid of using debit cards and credit cards because they don't want their information being out there. And especially with the cybersecurity, there's been a lot of attention with that lately. Of course, there's the Colonial Penn hack, but there's also, on the smaller scale, maybe not smaller scale, but a different scale, is a few years ago, Target was hacked and people were able to access all the debit card and credit card numbers that Target had in their database from people processing payments with them. And it exposed millions of people's data and information to people who wanted to use it for ill. And it caused a lot of consternation among Target as well as bank holders, people that own those cards. It was a very stressful time. So blockchain would, from my understanding, would allow that to not happen anymore. So if people are making payments over the blockchain technology, the bad people wouldn't be able to get in and access Andrew and I's credit card information or the information we're using to transact over that technology. Whereas right now, that is available to be accessed if the people work hard enough at it. The theory is that they would be able to access it. So for a company like Visa, for example, it offers possibilities for them, which could be really good for the company, but it could also be a competitor to somebody like Visa. Visa and MasterCard really kind of own the electronic transaction world. Like I said before, there are up and comers like PayPal and Square and some of those other companies that are certainly challenging. But as of right now, Visa and MasterCard, they really own the payment rails, as our friend Braden Dennis likes to talk about. And so they really control that. And blockchain could be an opportunity for either other companies like Square, for example, who's invested heavily in Bitcoin. And Jack Dorsey is a huge proponent of Bitcoin as well as the blockchain technology. That could be his way of that company taking market share from Visa at some point. we don't know. So there are certainly possibilities with the technology, especially in the payment space and in the banking realm. There could be a lot of opportunities. I think when you start talking about the actual coins themselves, the Bitcoins, the Ethereums, and any of the other meme stocks out there,
Doge.
all the millions of them that are out there. It's kind of dizzying to try to keep track of all of them. I don't know how people do, but anyway, it seems like there's a new one literally every single day. But anyway, the point is that I think once you get outside of the technology, I get a little more. I got to remember I'm an old dude, so it gets a little more scary for me. So I guess I would be interested to hear what Andrew thinks about the coin itself and Bitcoin and investing in that part of it.
Well, I think the fact that there are alarm bells going off in your head is not so much a factor of your age as it is a factor of your experience and your knowledge of history. And the fact that, again, a lot of this stuff is like brand new tech and a lot of it's so innovative and it could change the world and a lot of it could also fall away. I like the example. I should have like had the source, but it just popped in my head. I heard it a couple of weeks ago. Basically this idea that back in the day, oh, you know who it was? It was the guy who you sent the video of. He had the Terry, what's a fun?
Terry Smith.
Terry Smith. Yeah, yeah.
Yes.
He had a great speech on YouTube. Go check it out if you're able. Basically, he talked about how back in the days of the internet, there were actually a lot of companies that were competing with Microsoft. Like the first competitor for Microsoft Word was actually a different software program that everybody was using before Word. Same thing with Excel, and then actually Microsoft bought that program and turned it into their Microsoft Excel. There was another spreadsheet program before that. So like, and you can use that kind of example for so many different types of technologies. And that's what makes it such a dangerous place to be in, because you really don't know what innovation is going to be the one to kind of be the key. And it's only obvious after the fact. So, we could look today and see Microsoft as one of the biggest companies in the world and say, well, yeah, I would have known to invest in Microsoft, but
duh.
That's a story that's old as time. So when you talk about new innovation, that's one problem. I think a second problem, and this is kind of something, at least when we're recording this in 2021, this is a problem where it's a very volatile market. And so, when you put the word investment into anything with crypto, it's almost insulting, because something that has this much volatility, sure, that's part of the whole thing, right? And it needs this volatility, and I understand like Bitcoin's supposed to have this volatility, and it's something that's good for them because it increases their reach and increases how much people use it and everything, and it brings its attention to it, and the more people that have attention on it, the more it will be used. And so it's this really long-term thing, right? That's the Bitcoin plan. But regardless, it's not an investment because it is so volatile. And so, the way that kind of I look at investments is very old fashioned and very, very boring almost, where I want to buy things that produce a cash flow and I want to compound my capital. So that means I want my money put to work for me. And so that's why I buy things like stocks and businesses, because these produce cash flows and those compound over time. And to me, that's a lot more reliable than trying to figure out what the latest and greatest and best innovation is. There's people that are good at that, and I'll kind of leave that to those people and the entrepreneurs and the pioneers in that. But for me, what fits with my temperament, what fits with how I look for a margin of safety, it's really in cash flows. And so he asked the question here, is it a good long-term investment strategy to help boost your portfolio? It could be a great hedge for a lot of people. At the same time, if it doesn't fit your investment temperament, if it doesn't make sense to you and fit your personality, then the volatility is just going to kill you and it will not help your portfolio. So that's something that's very personal. And what makes kind of crypto really different from a lot of the other type of investments is this volatility, is these features, and is the fact that it's not the same as holding gold, as an example.